Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Monday afternoon. I love starting the trading week with you all. I'm Nadine Blaney. All right, let's get straight to it, shall we? Take a look at where this local market is sitting. I can understand why local investors are getting a little bit frustrated. So while the S&P 500 and NASDAQ logged their sixth consecutive weekly advance, the longest winning streak since October 2024, the ASX continues to underperform. So we've got the CIBO Australia Index down by 0.3%. The S&P ASX 200 down a little bit, around that amount, 8,699. But I've got to say, around the region, other markets are higher. So we've got the Hang Seng up by 1.5%. Chinese mainland markets, not shooting the lights out, but looking fine. The KOSPI is up by a punchy 4.7%. Of course, some of these South Korean companies really benefiting from all of this big AI spend. But yeah, our market just, you can see, just flatlining it through the afternoon, and no real pickup as we move toward the close. I've got David Scuddy, my friend, standing by. He'll give us his thoughts on some of that in just a moment. That was a pretty moody Monday. I like that. Thanks, Marius, the producer. We've got a bit of a hint that there could be some sort of movement, at least in the Strait of Hormuz. We're not talking about opening, but we're hearing from the U.S. President Donald Trump that he will look to do everyone a favor and start getting some of those stuck ships out of the strait. So we'll find out if that is just a Monday pump or if it's something more significant. Look, when it comes to rates, everyone I've been speaking with is expecting a rate hike to come from the RBA tomorrow. Now, interesting that we've done a number of interviews on this very subject throughout the day, as I'm sure you can imagine. Isaac Poole of Ascalon Capital was one that comes to mind, and you can check that out online at ausbiz.com.au. He said that maybe the case might be one and done coming from the RBA. He reckons that, look, the RBA may sort of hike tomorrow and then take a bit of a pause, sit on their hands to just really see what happens in terms of not just geopolitics, but also when it comes to the unemployment rate. So if we start to see jobless rate rising, that might precipitate some sort of a pause coming from the RBA. Look, we'll know this time tomorrow, won't we? What we do know is that 6 out of the 11 sectors, I think it is, are looking pretty weak, and that includes consumer staples. So a continuation of the selling that we saw last week with Coles and Woolworths in the wake of their quarterly updates. Metcash also lower, Grain Corp. If you can't get oil through the Strait of Hormuz, then you can't get fertilizers. Can't get fertilizers, life becomes a lot more difficult for farmers, doesn't it? Although, I guess the flip side to that is that it could drive prices higher for soft commodities. Discretionary retailers really hit hard. Look, there are rumors, and thank you, AFR, I'm taking this from one of your reporters, that we're seeing some companies pulling out of the Macquarie conference, which is largely now looked upon as sort of the place to do your confessions before earnings season. And Temple & Webster was named in that report as one of those consumer discretionary companies that is not fronting up. Lendlease, I think, was mentioned as well. Today we had an update from Endeavour Group. I'll get you across that in the news. It's significantly lower, but the poster child for consumer discretionary, not on that page, but it was Accent Group. I'll get you across that news in just a tick. Energy as well, coming under pressure as we saw the price of Brent retreating. But Paladin was featured on the call today. I won't tell you what my guests called it, a buy, hold, sell. But I've heard so much positivity about the uranium space as of late. So there's your clue. So in the news, NAB hit a near 9-month low on missing its interim profit estimates. ResMed, look, it reported on Friday, picked itself up off the mat today, up by about 0.6%. Viva Energy says that repairs to its Geelong refinery following last month's fire will take approximately 6 weeks. Shares down by 2.8%. There's Accent Group, 6-year low, cut its profit forecast for FY26. and its CEO and other executives being investigated by ASIC for alleged insider trading. Not a good look, accent. A2 milk fell. Infant milk formula batches have been recalled in the US. And there's Endeavour slipping the most in over a year after it flagged higher fuel costs and also trimmed its guidance to the downside. So let's get a view on markets and everything besides. David Scott from StoneX is joining me now. Nice to see you, Scotty. Thanks so much for joining us. Look, I think it's called Project Freedom, is it? What the US president is talking about? Is this just to get some good headlines before US markets open on Monday, or am I just a cynic?
Not the only one, and g'day Nadine, great to be back. Yes, look, exceptional timing as ever, about an hour and a half before Globex reopened. So we saw that crude futures opened marginally lower, we saw that stock futures higher, and we also saw that rate futures in the States managed to go and strengthen. So we've seen a bit of a retracement of those moves, but it set the tone, and as you mentioned, across Asia, excluding the other poor old ASX, it's been off to the races. The semiconductor sector is on fire right now.
Yeah, so what's up with the ASX? Is this just structural? And so we can't expect that sort of gap between performance here and elsewhere to narrow?
We really lack a true growth area in the market. And you've touched upon some of those discretionary retailers as well, that there were high hopes for several years ago, but you've got an environment where you have RBA looking to go and push policy into restricted territory in the not too distant future. You've got no tech sector. You've got big banks and miners that are probably as fully priced as you can go and get. And you put that combination together and it doesn't really surprise. And you also have an environment where it's risk on elsewhere. So as a global allocator, you're looking at the ASX and you're saying, well, no, is there a need for me to be parking capital in this particular market, or should I look to go move abroad? And I dare say the answer is the latter right now. Just from a technical perspective, this is our ASX 200 contract. It's really a simple price action. On the downside, 8,600 is the level to watch, 8,900 on the top side. And you can see there's the 50, 100 and 200 day moving averages almost smack bang in between. So you look at that, that's the place to go and look at when it comes to trade setups, but that is the range that the investors should be focusing on right now.
My goodness. What happens if we do see a hike coming through tomorrow, but we do get some sort of a hint that the board is at least willing to consider holding in the future, sort of a one and done-ish scenario? What might happen to equities?
At the margin, it probably would go and support them just purely on a valuation basis. But look, it's 80% plus price for a hike to come through. What it comes down to is, will we go and see an additional hike and a bit that's priced into the market confirmed by the RBA? I'd say that they will not go and do that. You rightfully mentioned one of your guests previously on the show was talking about the potential that might go and signal that it's one and done. They won't signal like that. But I suspect what will happen is that you might go and see a split when it comes to the vote on this occasion. And then when you go and look at how Governor Bullock might go and frame it, we're returning the cash rate back towards, or back to the level it was at the top of the prior cycle. And you have an environment where you've got a lot of retailers. You can see that the consumer is starting to go and struggle here. So when you put that into the equation, it might give the RBA ground to say, hang on, we're going to go and reassess. We'll wait till the next quarterly inflation report comes through and then make up our mind. Everyone knows that inflation is going to be a problem in the near term. It's just, will it be a sticky, persistent problem? And if you have higher unemployment, you have much more slower growth. I dare say it probably won't be. Yeah,
okay. So it's a really interesting juxtaposition to see the ASX underperforming in a risk-on environment where the Aussie dollar has been really remarkably resilient. It's actually benefiting from the risk-on environment. Is that fair to say, David?
Absolutely. David, I must be in trouble as well. Look, when it comes to the performance of the Aussie dollar, it's really been a story about what's happening with risk appetite. It's not about rate differentials. It's not about commodity prices or anything like that right now. It's almost purely risk appetite out there. And whilst the Aussie did go and trade to fresh multi-year highs earlier in the session, that was helped by more innuendo about potentially the Bank of Japan intervening in the other Japanese yen. it has really been struggling above 72 cents. Now, I pay really close attention to what the Aussie is doing because it's a great indicator, a lead indicator that I feel as to what broader sentiment might go and do in the future. It's much more liquid than so many other asset classes. So the fact that it's struggling now to go and push to fresh highs is just one of those little warning signals that says, hang on, maybe the broader risk rally we've seen over the course of April and into early May, it may be due some form of pullback in the near term.
Well, it's interesting because I was speaking with Armina Rosenberg from Minotaur Capital a little bit earlier on, and we were talking about AI. Obviously, we're talking about the semi-industry, and she was talking about SK Hynix. So that is a South Korean semiconductor company, and I was just doing some reading in the break. Shares have jumped 99% this year. Now, I know, Scotty, that AI investment is what's driving a lot of the growth in the US. I think it was 75% of the 2% first quarter GDP was directly the result of AI investment. But I don't know, you can't help but think that a 99% share price rise for SK Hynix is pretty punchy when we still don't know where all of this is going to end.
Correct. And I've got real mixed feelings on this. If it was just fundamentals, I'll be getting concerned about what's going on at the moment. The thing that I keep coming back to, though, is I need to have price action go and confirm my suspicions, and that helps to go and keep my my attitude in check sometimes. I'm very opinionated, as many people on the other show would remember. So at the moment, I'm looking at it, and the price action, it is unbelievably stretched. It looks crazy, it looks wild, it looks too good to be true. But then when I go and look at the price action on the way up, and you're having these real minor pullbacks along the way, which is a healthy sign for a bull market. So when I look at it, I've got real mixed feelings. I'm acutely looking forward to any sort of indicator that we see, like a near-term top, like a topping signal, but it's not there in place right yet. And when I look at what's coming through the pipeline, the capex spend that's coming through to these companies, and the fact that they're probably going to be able to go and raise their prices into this inflationary environment, which could eventually go and help to go and boost margins. It's difficult to go and say, I don't want to be part of the rally right now. But at some point, I think it's going to come down in a cataclysmic kind of collapse. But anyone's guess when that's going to be.
It is so difficult out there for investors. And then you take Bitcoin. I mean, what's the Bitcoin situation telling you? Because it's been performing.
It has been. And it's one of those things, again, where I don't believe in it really on a fundamental perspective. The thing that I think underpins Bitcoin's price, other than liquidity, is price action itself. And it's been grinding higher. It's not been a real massive move that we're going to say, but at the same time, it's very constructive. And right now, we're sitting at the next juncture. The bulls are getting tested right now by 80,550, which was the low that was set back in November 21 last year. Anyone who looks at the Bitcoin chart would go and look at that level. And when it was broken in February, it was like a hot knife through butter. So it's a key level on the top side. But when you look at the risk appetite and the environment out there at the moment, it's starting to go and really move along with what's going on in the AI space. So keep a close eye on that, but it's looking increasingly constructive from the upside in the near term.
Right. So sort of an AI sentiment proxy is what you say?
It is. And it's also, when I'm taking a step back, it's telling me that liquidity conditions in the markets are still flush because you don't see these assets going crazy. Doing 2, 3, 4% increases in a day. You mentioned the South Korean KOSPI. Futures are up 5%, just like any other normal day. That's telling you that there's still a lot of liquidity sloshing around the system. And when Bitcoin's moving, it's a good sign that elsewhere risk assets more broadly are also seeing a lot of liquidity flowing to them as well.
Scotty, love your work. Thank you so much for joining us today. Appreciate it.
Great to be here. Take care.
David Scott from StoneX. Yes, I said David. We call him Scotty around here. All right, let's get to a bit of a look at the stock of the day. I couldn't resist. It's Accent Group. I spoke with Zach Riaz from Banyan Tree Investments and David Novak from Wealthwise Education. Take a listen.
It's pretty horrible. And then with this announcement today, I mean, the consumer discretionary sector is there it is. Look at that. I mean, that's going back to 2013-14. What's interesting is look at that lower blue line. That's a support level. Every time it's touched that, Accent Group has bounced very strongly. It's come down to actually below that level today, because I updated this over the weekend. But yeah, look, I wouldn't be rushing to buy this just based on that, trend.
Like David said, I mean, this is not a small company. It's got 1.6 billion in sales. EBITDA is around $300 million. All else being equal, it's going to increase. But like David said, the margins are low on these ones, and you don't have much wiggle room around margins. The other concern I have with this, it's got pretty decent level of debt levels, right? So consumer confidence, top line pressure, already thin margins, then you got debt levels, and I think they've done deals to roll out new brands. That leads to further increase in costs and depreciation, blah, blah, blah. At the end of the day, all that leads to a fair bit of sort of uncertainty.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
So let's take a look at some of these companies that helped move the market today in percentage terms. We've got Life 360 topping the list. In fact, Infotech was the best performing sector on an otherwise down day. Imdex Drone Shield reflecting the broader environment. In fact, just to get you across the latest on the Strait of Hormuz, Iran's armed forces are warning the U.S. against entering the strait. That's after Donald Trump said the U.S. will help ships stranded in the Strait of Hormuz. A tanker has actually been fired on there. So still watching those headlines out of the Middle East. Flipping the page to see what helped drag on this market. Look no further than A2 Milk down by 10%. Lovisa, I would hazard a guess that it's falling in sympathy with Accent Group, off by 5.25% to $22.76. Bank of Queensland down by 4% to $6.42. Some of the smaller companies now, Gorilla Gold Mines doing really well, up by 12%. Alterity Therapeutics as well, up by 10%, but to just 1 cent per share. Now, those that did lag in the smaller end of the market, look no further than Fortify and Cobra Group along with Accent. Here's a look at what we're expecting tonight. Palantir, On Semiconductor are reporting. So we still do have those earnings coming through, and those are actually two really interesting ones. So I'll be reading those in the morning. And we get the EU final manufacturing PMI out as well. Here tomorrow, it is all about the RBA. A hike to 4.35% is expected. Westpac puts out its first half report, and and NAB really got hit hard in the wake of its down by 1.2%. CBA Westpac down today as well. ANZ though, shares were actually higher by 1.6%. We also get household spending from the month of March, but all will be dwarfed by the commentary coming from the Reserve Bank Governor Michelle Bullock in the wake of that statement that gets published at 2:30. We will have full coverage from 2:30, and we will bring you Michelle Bullock, the Governor of RBA's media conference in the wake of that. That happens at 3:30. We'll stick with it for as long as she speaks, looking for those tidbits that might give us some sort of an indication as to what the RBA is thinking in terms of rate hikes going forward. And of course, my colleague Juliet Sally will be there. So yeah, you've got an inside scoop from those proceedings. Let's take a look at where this market has ended, down by 0.3%. The S&P ASX 200 finishing the session lower by close to 0.4%, 8,697, despite U.S. futures in positive territory, despite gains being seen on other Asian markets. Boy, sometimes it can be frustrating to be an investor. And just worthwhile mentioning that Seoul's stock market, the COSPI, has extended its gains. It's now up by more than 5%. Look, if you haven't been watching all day, you have missed out on a lot. You might want to catch up through the overnight period on ausbiz.com.au. I know most of you are watching us there, but we also have a lot of podcast listeners as well. If you enjoy the podcast, we'd love it if you could give us a review. You can do so on your podcast apps, however you consume them. It does help it reach more people. And as I say, the more, the merrier. We'll see you tomorrow when we're live at 9:45.